Alright, you guys. So, if you are on Facebook, welcome to our live stream. If you're watching this through YouTube, this is a replay of a live stream that we have on our Facebook group page. So, if you want to join the group page and be a part of the live so you can ask questions as we're going through this, the link to my Facebook group page is down below in the description box. So you can join and be notified when we go live, which is going to be on Fridays at 11 a.m. So, um, with that being said, none of this is financial advice. None of this is a recommendation. This is just me documenting my own journey towards financial freedom, showing you guys what I do, my thought process, what I'm investing in. This is not me. Thank you. This is not me telling you guys what to do. I'm just showing you guys what I'm doing and how you can use the stock market to make money, to create financial freedom, to make a supplemental income, additional income, so you can use this money to, pay for things such as gas, groceries, save for vacation. So you don't have to use your hard-earned cash from your jobs to do it. So you can kind of use that money as a tool, as leverage, so that you can do stuff like this, and then this will fund basically anything that you want to do that's extra outside of your regular bills. So with that being said, this is my account right here. It's been staying around this price range between like I'll say 34 and $3,500. Mainly because I had to buy 100 shares of Microvision, which is currently down 228 bucks. So that's that. What I might do next week is buy it or sell an option, which is what I mainly do on this channel, is sell options. So I get paid to put my shares on sale, or I would get paid to buy shares. So that's that. But the first thing we're going to go over right now is this SPY call. So I'm going to backtrack really quickly. Well, let me click on it real quick and show you guys what's up. So as you can see, I'm up $120 or 126%. So what you want to focus on is the 126%, because when I scroll down here, you can see my average cost per share is 95 cents. That's my average cost per contract. So I only bought one contract and I bought it for 95 cents or $95. So the reason why it's 95 cents is that would be the price for one share, like it says average cost per share, but a contract controls 100 shares at a time, so you have to multiply this number by 100. So I had to spend $95 to open up this contract, and I bought it. So on the other side of selling contracts, you buy contracts, and that's what I did. I bought this for 95 bucks. You can see right here, and this contract expires on 11/19, so November 19th, and it's a 474 call. So what that means is, if the SPY goes above $474 by the end of this date, then I can sell I'm agreeing to buy shares at a certain price. So it's not an obligation. It's not like when you sell, where if the contract goes in a certain direction, then you might have to buy the shares or might have to sell your shares. When you do this, you're just saying that you agree to do it, but you don't have to. So what happens is, the closer we get to the expiration date, if the SPY does not get closer to this price, then the value of the contract is going to go down, because no one's going to buy it. You know what I mean? So when the SPY gets higher and closer to my strike price, the likelihood of somebody wanting to sell me those shares for that price are going to increase. So the value of the contract increases. So if I just look at, I'll go to that strike price really quickly and show you guys, or expiration date, I'm sorry. So as you can see, the price is $4.39 right now. So the lower I get, the more expensive these contracts are. So it goes from $15.95 to $17.25, and then the farther away I get from the strike price, so the higher I go in strike price, the farther away I get, it gets cheaper. So that's because it's less likely to actually happen. So with contracts, you have to worry about time, because it has to happen in a time frame, and then you have to pick one where you're either comfortable with the price that you pay, or comfortable with the strike price where you think it might fall within in the money, basically, at that point. So in the money means that the price of your contract is lower than the price of the shares. So right now I bought the 474 call, which is higher than 439. So the contract is only worth like $2 or $200. But the great thing is when I got it, it was much lower than that because the SPY was down at like $425 per share. So I'm gonna backtrack just a little bit more to explain something there. Um, I'm gonna go to my chart. I'm gonna end up collecting that money today, but I drew this box here just to show you guys that this is the range that I was in when I made this call, or when I decided to do this. So this is a little bit of chart reading, a little bit of how to use charts to determine when you want to buy and sell stuff. So I'm gonna go back very far, make this a little bit smaller. You see I drew this line here, and what this is called a trend line. And basically what you're doing is you're drawing a line at all the low points that connect. So as you can see, it had low points here where it hit here, and then went up here, went up here, went up here, went up. But if I draw this line here, you can see it hit here, here, and here again. So when it happens more than twice, it's considered a trend. When it happens 3 times, that's basically confirmation that you have a solid trend line. So what that means is when it hits this line, some people are willing to buy the shares. So they're saying, I will buy the shares at this price. So that's what makes the price go up. Same with when it hits the top. So if it hits the top and comes down, hits the top, comes down, hits up here and goes down. It's the same concept. When it gets to the top, though, people are willing to sell it. So that's when people say, I'm going to sell my shares. When it hits the bottom, that's when people say, I'm going to buy shares, because they're buying it cheaper and they're selling it expensive. So that's how you make money in the stock market. You buy low and you sell high. When it comes to contracts, though, one reason why you'd want to do contracts and not shares is because of the leverage that you can use with a little bit amount of money. So if I bought SPY when it was down here at $425, which you can see in right here. So if you look in this area, that's how I'm figuring out the price at the moment. If I bought it right here at $475, I need $425 to buy one share. And then for it to go up to $439 where it's at now, I would only make $14. So I'd need $425 to make $14 off of this move, where I bought this contract for 95 bucks and I made $119 in 5 days with only $100 with the same stock. And the reason why is because with contracts you control 100 shares, so it's like owning 100 shares of a company without actually owning 100 shares. And the reason why that is because it's a contract, so it has an expiration date. So unlike buying shares where you can hold it for as long as you want to until it goes in the money or the stock goes up, with contracts it has to happen in a short amount of time, in a time period, depending on where you buy your contract, which expiration date you pick. So you have to do your research. You have to figure out, when do you think this might happen, this move might happen, and then waiting until it's the perfect time. So that's one thing that I am very happy with myself with this one. I'm going to go really low into this. So what happened was I made this plan somewhere over here, and then it dropped. So it came down and it almost hit this line that I drew here, but not quite. It did not quite hit the line. So I did not buy it. I said I'm going to wait until it hits the line to buy. And it didn't hit the line, and as you can see, it came all the way up and made a new high at 437. So that could be something where I'm like, okay, next time it gets close to my line, I'm going to buy it, because it's probably going to do the same thing, because it's been doing that, and it could happen again. So what happened was the next couple days it went up like that, and then it came down and it almost hit the line here, and that could have been a time where I'm like, all right, I'm going to buy it, because last time this is what happened. But I said I'm going to wait until it hits that line that I drew. I'm not going to buy in early. If it doesn't hit the line, I will just wait. I'd rather be patient. Not really. You could be an experienced wizard, or also listen to some people that have experience and really take that experience to heart, and don't be one of those people that have to learn the hard way. But most of the time, the only way that we really learn is learning the hard way. So that's where you really learn and understand all the emotions that are involved, why you stick to a plan, all that good stuff. So as I was saying, I could have bought it here. This was a Friday, but I decided to wait. And then over the weekend when Monday happened, it dropped way below my line, and it did hit this yellow line, which is where it's been going in the past. But it did hit this yellow line, and I waited till like the end of the day to see how this candlestick would close. And because it has this long wick right here, that means that at the end of the day there was buyers willing to buy an SPY at that price. So I was like, all right, because of this, if this whole thing would have been red, I probably would have waited. But because it came up, I noticed that buyers were active towards the end of the day. So that's when I decided to buy my call. This is the daily time frame. So I usually look at the daily. I don't normally go down any lower. Maybe the 4 hour, or I'll look at the 30-minute if I'm really trying to hone in on my strike price, or if I'm looking to buy an option that expires closer than 3 months. But if I'm looking anywhere past 3 months, then I'm always looking at the daily time frame. So I just kind of looked at this one. And then, like I was saying, if I was going to buy my contract at the end of the day, then I would go to the 30-minute or the 30-minute candles to really get an idea of what's happening in those last 30 minutes. So it's going to be kind of hard to see here, but let me see if I can figure it out where we at. Yeah, so I think this was all Friday right here. So it came down. This is 6:30. So this is when the stock market opened. It came down right here, and this is 12:30. So 12:30 is this huge green candle. So the last 30 minutes, buyers came in and tore it up. So that was a good indication to buy it for myself. I bought it within those last 30 minutes, and that's how I ended up where I'm at right now, because I bought it at the lowest point. Basically, I bought it. It couldn't have been any better execution because I bought it at the perfect time, and I would say I knew this was going to happen, but it's just a prediction. It's not an actual thing, so you still have to be right. But I put a couple of things in place to, I wouldn't say validate, but confirm what I was thinking. So I bought that contract, and it's basically, you see all these green days. So 4 straight green days of the SPY going up. I said it was going to hit the previous high and make a new high, and it just made a new high, 439.75. So my contract is now worth 219 or 212, 211. So I turned $95 into $211 in just a week or 4 days. That's 122%. That's with one contract. So let's say I have $1,000. Obviously, you want to pick a risk tolerance. Like, you want to be okay losing this money. So I was okay losing $100 if that's the case, but I had a stop loss. So if it did go down to $50, the value of my contract, I was going to sell it and say, you know what, I didn't make the right play. I should have waited, and then that's when you go back and reevaluate. But I made the right play. I made all the money that I could possibly make. I did want to wait until it hit $440, which I could sit here and wait to see if it happens. I also wanted to wait until it hits this line right here, exit on this line. But the reason why I'm going to sell it today is, one, you guys can see me collect profit live on stream, and two, because I only have one contract, I do want to secure my profits, especially being up over 100%. But I doubled my money. So being up over 100%, it does not happen that often if you're day trading. If you're swing trading within a certain time period, it's very likely, but there's a lot more risk involved trying to make money faster. So you can either make money fast or lose money fast. You have to be right. You have to be you have to execute the way we executed here. But if I had multiple contracts, I would have sold one contract once it came above my bottom trend line. I would have sold another contract once it hit here, and then I would just leave the last contract to run and basically wait until a red day or it hits my line, and I'm okay with that. So one thing to note, you don't have to wait until it hits, a certain price. Collecting profit is collecting profit. You're never going to go broke collecting profit. But one thing you want to make sure you do is, if you're down on a position, you want to make sure that you leave the position when you're down, because you don't want to have a couple winners where you got out early. Like, let's say I waited and I didn't get out right here, and I was like, I'm gonna get out right now, right? And I didn't wait until it hits this line. And then when I do lose, my stop loss is like way down here. So when I lose big, and when I win, I don't win that big. So you want to make sure, whatever your strategy is, that when you win, your winners will outweigh your losses. So that comes, like you said, I guess with experience, learning from others, listening to other people, through YouTube or other people who trade that personally, and just listening to their strategies. Pick their brains a little bit, ask them some questions, see what their thought process is. But with that being said, I'm going to go ahead and sell this thing right now. So minimum credit is 209. Let's try to make this 210 and see if I can get filled at 210. Make it a flat number here. And so I'm going to put this in and just wait to see if we can get filled here. And basically I need the SPY to come back up a little bit. So right now it's at 439.75. We'll just wait to see if this gets filled. In the meantime, if you guys have any questions on this, let me know. As far as my trend lines or entry point, exit point, all that good stuff. I just need this to get filled. $114 is 120%. That's pretty good. I don't know what the highest this guy was. I could have sold this at 215. The 215 was the highest it went. And then one thing to make sure you do is, if your option is up and then it comes down a little bit, don't sit there and wait for it to go back up, because that's when you lose. You're gonna end up losing more money. So hopefully this goes back up. We'll let this stick around for the rest of the night, or the day basically, and then if it doesn't get filled by the time we're done live streaming this one, then I might try to change my price a little bit lower. So with that being said, let's go ahead and continue. One thing I was thinking about doing was getting rid of the ARK ETF investment and putting my money into the SPY, just so that you guys, because I've been telling you guys, if there's anything that you should invest in off the bat that you are uncertain about, if you're new to the stock market and you don't know what to invest in, the SPY would be the first place I would look, or the Russell 2000. If you want to start investing in individual stocks, look inside those ETFs, or you can invest in the ETF itself, and that way you get exposure to all the stocks that are in there. So what I might do is sell this position and then start buying SPY on all the dips, or every month. So we'll see what happens. Right now I wouldn't buy any SPY because it's at a new high, so it's going to come down at some point. Then you can buy some more. But that's one thing that I'm looking to do with this right here, with ARK. Tesla, I'm just going to hold it until it goes green. I haven't bought any new shares, I haven't put any more money into it recently, just because I got a couple other things going on. I want to pay more attention to options, because I feel like that is an area that we have not touched on enough, and an area where you can make the most amount of money in the stock market. Swing trading is probably how you can make the most money in the stock market, and a lot faster, because you don't need as much money and you can generate greater returns, versus this way, buying stocks. But this is the safer way. So you got the riskier way, but the, what would you call it? I wouldn't say it's the best way, but the best way to leverage your money, best way to invest is through options. The safest way is through stocks. And then things like Bitcoin down here that I have, it's just speculation. So you're just putting money in there and seeing what happens. Yeah. Be okay with small wins, and don't beat yourself up for what you could have made. Exactly. So hindsight, you do want to look back at how you executed your plan. So what I will do is continue to monitor the SPY and see, if I waited, will it hit my line, or will it end up coming down first? Because I did buy this option that expires in November, I have plenty of time for this to actually happen. But the reason why I'm getting out now is because it did make a new high. I did want to collect profit on the live stream for you guys, and then I want to move on basically, and we can do this again. And then at that point, then I'll go into buying multiple contracts. I'll go into scaling in and scaling out, which is what I was talking about, where you sell a contract, sell another contract, and then hold a contract until you're ready to let it go. But I just wanted to show you guys a quick way, a quick option. This was a swing trade, so not really a day trade, but a swing trade. I could have traded this. I could have sold this the next day, If I bought a contract that was closer to expiration, I would have made more money because of the size of this green candle. But one thing that you do want to make sure you do is buy yourself time, especially if you're new. That way, if I did buy it here and it went down a little bit more, then I didn't lose a lot of money because I have enough time for it to come back up, and then I could have bought another contract at a cheaper price and then kind of help myself make money quicker. So with that being said, let's go to my microvision play. I think this is still waiting, so we'll see what happens. I might have to try 409, but either way, anything over 100% is good. So microvision, I'm down $224 on this. So if it wasn't for microvision, my account would be up over 3,700 probably. But I did make a lot of money using microvision, so I'm going to continue doing that. I might wait for this to come up a little bit more, maybe over 14 or 15 before I sell a contract, because I want to sell a contract where if I do end up selling my shares, I'm gonna make money off of it. So what I would want to do is go about a month out. So I could go to August 20th, look to sell calls, and then I'm looking to sell my shares for no less than $17 per share, because I want to make at least $100 when I sell my shares. So I could sell this one, make $85 today, and then if it does not go above 17, then I keep that 85, I keep my shares, and I can do it again next month. So what that means is, right now I'm down $225 on my shares. Where's the calculator? Is it gonna come up? All right, cool. So right now, let's say I'm down $224, right? And then because I made $85 today, now technically I'm only down $139. So let's say I do that another month, it never comes back up, it stays around this price, and I sell for another 85. Now I'm down only 54. Let's say another month happens, same thing, sell for 85. Now I'm up $31. So basically what I'm doing is lowering the amount of money that I'm down by trying to sell my shares at a certain price. And then at that point, if I wanted to sell my shares because microvision's just not cooperating and I want to get out and get my money back, then I can do that. And I waited until I was up on the position before I decided to sell my shares. So I wouldn't make money on the shares, but because I've been selling options, trying to lower my cost average basically, then I can sell it, and I didn't lose any money. It just took me 3 months to make up for the money that I'm down on. So that's one thing that you would do, that I do with selling options. So just keep that in mind. I'm not sure why this is all laggy, but with that being said, if you guys have any more questions, be sure to ask them. Next week we will look at another option play we can do, either with the SPY or with another stock. Doing it with the SPY is probably the safest route, just because it's an ETF. You know, it's good. It's gonna come up eventually. Whereas when you do it with a stock, like let's say we picked AMD, right? As you can see with this stock, I wonder why this thing's so slow. It's a lot of ups and downs, so it's not as linear as the SPY was. You can see this is very choppy, up and down. So you could trade the range. So like when it came up here, I could sell it and then wait for it to come down and hit one of these lines to buy it, and then sell it and just stay within this range instead of waiting for it to hit a new all-time high, because as you can see, it has not done that since January, so a long time ago. Whereas the SPY, it basically makes a new all-time high every couple days or every week or two. So you can see this is more linear. Like this is basically a line straight up. So we'll see what happens, but we did execute perfectly this week on a swing trade, and let's go ahead and sell this. Let's get out of here. Let's get out of this. And then what I want to do is monitor this later on. So I want to see what happens in the next couple days, right? So I want to see, okay, if I would have held it a little bit longer, did it hit my line next week? What if next week it's a big red day like it did over last weekend? What if this weekend's the same thing? You never know. Don't be afraid to take profits. Making money is better than losing money. Don't hold on hoping to make a few extra dollars, because that's when you're probably going to lose. I'm just speaking off of experience. And yeah, so let me go ahead and sell this. Let me go ahead and try to change this. So I'm okay with anything over $100 return. I'm not going to beat myself up over just a little bit of green. Hold on a sec. Alright, here we go. Let me refresh this. Try to sell this bad boy. That's crazy that I doubled my money. So if I would, like I said, if I would have had $1,000 in here, then I would be up over $1,000. So obviously the more money you have in here, the more money you can make. Let's try 207. Come on, cuz. See, that's one thing with Robinhood too. You're gonna have to go on the low end of the spectrum when you want to sell it. So let's replace this for 206. Let's try 206. Come on, cuz. Let's see if this works. I was gonna say 205 too, but I don't want to go too low on the end of the spectrum. But let's try it. Let's try it. See, like this will give you the range. So this is basically this called the spread. This is where buyers want to buy, and this is where sellers want to sell. So the wider the spread is, the harder it is to get filled where you want. The closer it is, the easier it will be to get the options at the price that you want to get them at or sell them at. So let's see 205. Let's try 205. I'll probably get 205. There we go. So I sold it. I sold that bad boy. $205. We out here, baby. That's crazy. So now you're gonna be able to see that my you're gonna be able to see my buying power went up by $205. So now I have almost $1,000 in buying power. Lock that bad boy in there. So now we'll just monitor the SPY on its own, see what happens. But I probably wouldn't change the execution. The only thing that I would change is buying more contracts. But it all comes to risk tolerance. So how much money are you willing to lose? If your account is only a $3,000 account, you don't want to put $1,000 in there, because if it goes in the wrong direction, you're going to be losing hundreds of dollars at a time. So your portfolio is going to go from 3,000 down to almost 2,000 fairly quickly. Where mine's, if that contract did go down by the whole $95, then my account would only go down $95. My account would still be well over 3,000. So you don't want to be using all of your portfolio for one option. If you have a different game plan, like if you're just throwing money in here that you really don't need, you're just in here trying to just basically gamble and hit home runs, then go ahead and do it. You know, it's all personal preference, but let's go ahead and fill this bad boy up, because I made $205 today. Super hype. Well, not two. I made what is that? I made $100, $110. That's pretty solid. $110 in 1 week in the stock market, but I only used $100. And guess how many hours of work I did on this? Freaking zero. I spent 0 hours, less than an hour, probably less than 30 minutes coming up with this game plan and just waiting for it to happen. So I didn't have to go work. I didn't have to do any manual labor. I didn't have to clock in anywhere. I didn't have to drive anywhere. I'm doing this at home on my laptop. It takes 15 minutes, and then I'm off doing all my other good stuff. So that's that. So what we can do now is relax. Take that 110. And one of the greatest things about this 110 that I just made is that I made that 110 with money that I made from this right here. So I sold a Microvision put. I made $114, right? I took 95 of that 114. Let me put this right here. I took $95 out of that 114 and made an extra $60. So let me pull out the calculator real quick and show you guys how I was able to just like free money basically. So the stock market paid me $114 because I said I wanted to buy a Microvision. Simple, right? All I needed was $1,600 to do that, and that's that. That's a stimulus check, and then some, or whatever you want to call it, a tax refund. So $114 right there. I took 95 of it to, I bought a put on Microvision because I thought it was going to go down just like it did. I made $60 off of that, so let's add $60. So $174 is where I'm at. Then I took $95 again and I made $110. So let's go 110. So I made $284. Um, and then I guess I can subtract my 114. So I made $174, $170 with $114 that the stock market paid me. So I didn't deposit money to do this. I didn't use any money that I made myself. This was money that the stock market gave me, and I used that money. So I'm using money that I was given to make more money, which means that this is all passive income. So one of the keys to success is passive income. Um, the ultimate goal is to have your passive income pay for all your expenses. So if you can make the stock market pay for all your bills, let's say you make $100 a month right now in the stock market, and you use that money to pay for your, let's say, groceries or your phone bill, then what you do is you start working towards using it to pay for other things like groceries or your rent or your car or your insurance, all that stuff. So gradually increasing, making sure that you're gradually adding funds to your account. So that's one way that you can do this. So the more money you have in here, the more money you have to play with, obviously. But like I said, I only wanted to use $95 in here. So now that I have more money to use, I could increase my buying power. Well, I wouldn't say buying power, but my spending limit. So instead of saying I'm only going to put $100 into any position, I could be like, let's try $200. So now we're trying to increase our profits by increasing our investment. So if you can continue to save, so all the money that you make from your 9 to 5 or your regular income, really figure out how much you're using to pay for bills, how much is extra cash, extra income. Take that extra money, save it, put some of it in the stock market, and then gradually increase your portfolio. Use that money to what's it called? Use that money to invest and try to create more money. That way, if you lose it, you didn't lose money that you need. And then in the long run, the more you stick around, the more you stick to it, you'll be good to go. So with that being said, if you guys don't have any more questions,